what should I do with my investment in stock and shares now that the stock market is not doing great? Should I be selling my shares? You've said to me, Ronke, should I stop buying stock and shares and find something else to invest in? You've asked me the question, should you be buying gold? Is that the way forward now that gold price is rising? What should I do with my cash ISAs, my fixed deposits? What should I do about them? Hello, beautiful people. How are you today? It's Ronke Odewumi, and welcome to my channel where we discuss all things money, business, career, and living a bulletproof life. Today's video was meant to be about how to keep your grocery bills down, especially in tough times. But I'm putting that on hold for a few days to answer some immediate questions you all have been asking me about. Since my last video, you've sent me questions about your investments and savings. You've said to me, Ronke, what should I do with my investment in stocks and shares, especially now that the stock market is not doing so great? Should I be selling my stock and shares? You've said to me, should you be buying more stock and shares, or should you put that on hold and invest in something else? Should you be buying gold now that the price of gold is rising? What should you be doing with your cash ISAs, your fixed deposit, that money under the bed? You've sent me all these questions, and you'll agree with me it's a good idea for us to put groceries on hold and answer these immediate questions. So we'll put groceries on hold for a few days, but don't worry, we're going to come back to them. I'm going to answer all those questions. I'm going to tell you how to keep your grocery bills down in my next video. But today, we're going to be dealing with the questions around your investments and savings. Now, before I start answering questions, we need to sort out some housekeeping. As a chartered accountant, I can comment on your income and expenditure and give you generic financial advice concerning this. My generic financial advice to you provides a platform for you to have specific financial conversations with a financial advisor. While I can comment on the future risk of investment markets and comment on areas to focus on, you should not make investment decisions solely based on the advice I give on this channel. I am not giving you specific advice on how to spend or invest your money. Please speak to a financial advisor before you make your investment decisions. So, housekeeping sorted, let's go to the questions you've been sending to me. What should you do with your investment in stock and shares now that the stock market isn't doing so great? You're right, the stock market isn't doing so great, especially for companies or the sectors that require us to leave the house and spend money for them to make revenue. On the other hand, companies who are providing the services and products we can't do without, they are doing great. These are the food companies, the food manufacturing companies, the health sector, the power sector, and the telecom sector. So whether you decide to keep or sell your stock and shares depends on a number of factors. It depends on where your stocks and shares are, what sectors in which you've bought them. Because if you've bought them in the sector that I said are thriving right now, then you don't have anything to worry about. It also depends on how your stocks and shares are performing right now. Are the prices going a little bit up? Are they stagnant? Are they dropping? Are they continuing to drop? You also need to think about how it's likely to perform in the future. Is it a sector that's going to recover very soon? Is it a sector that's going to struggle for a while, like the travel sector? You need to consider that. You also need to think about how much you stand to lose. If the price of your stock has dropped considerably below how much you bought it, you want to think about whether it's worth selling. However, if you don't sell it, is it likely to drop even further and then you lose more money? You need to consider your own risk levels. How much risk are you willing to take? So I've raised 5 points now you need to consider before deciding to do anything about the stocks and shares that you have. So go have a sit down with your financial advisor with these points I've raised and talk about your stocks and shares. The second question I have here is, should you keep buying stocks and shares, or should you be investing in other things? So as I mentioned earlier, some companies, some sectors are doing really well right now, and that's because we can't do without them. So which stock and shares are doing well then? These are the traditionally defensive stocks. They maintain their earnings and revenues during difficult times, so you can continue to make profit. And this is because they sell products and services that we continue to need irrespective of what's going on. So it's the consumer staples like food, health, and utility. They are ones to look at, they are ones to continue to buy. Talking of consumer staples, March recorded the largest grocery sales in the UK. In the US, Australia, and Canada, there was a huge spike in grocery sales across board too. This also applies in many countries in Africa. A lot of retail companies selling food, drinks, alcohol, and tobacco have recorded an increase in sales, some recording up to 15% sales boost. This pandemic has shown us that supermarkets are essential to us. Their revenue is not dropping anytime soon. However, things like supply chain issues have been known to arise and might continue to arise for them. COVID-19 has impacted their annual revenue, so even though they've had a huge spike in sales, this might be offset by the impact of COVID-19. Nevertheless, this consumer staples sector is one to bet on. If you are looking to invest, I will look into that space. For healthcare, we're talking about the health conglomerates, the health insurance companies, the pharmaceutical companies, the biomedical manufacturing companies. People don't buy their products because we just feel like. People buy their products because they're essential to us. These companies, this sector continues to thrive in crisis because health is a priority. And this pandemic has made it particularly clear to all of us that health is a priority. They continue to thrive and they're a good one to invest in. It's tempting to think that all pharmaceutical companies are in the front line of developing vaccines for coronavirus or generally developing vaccines, but a lot of pharma companies are in therapy areas that are far removed from COVID-19. However, some pharmaceutical companies like GSK are very involved in developing vaccines for coronavirus. This doesn't necessarily mean that it's going to be a success for them. For pharmaceutical companies, a lot of times developing vaccines is a hit or miss. But the point is still that pharmaceutical companies, biomedical engineering companies, biomedical manufacturing companies, health conglomerates, hospital management companies, and so on, are a safe bet when it comes to investment because health is a priority and it's a classic non-discretionary product. We buy it not because we like it, but because we have to. Utility companies, internet providers, network providers, telecom companies, all of these companies provide services that are essential to us and are becoming more essential because we are working from home, we're buying more data. In countries like Nigeria or in other African countries where we buy data in bundles and it's not a fixed monthly rate, the telecoms company are making a killing because people are at home, they're buying more data, they're working from home, they're homeschooling their children, we're spending on data. There's money to be made for these companies, these telecom companies. For the utility companies, we are cooking more, spending more on gas, our lights are on for longer, so we're going to get more electricity bills. All of these companies are going to have more revenue in the following months that are ahead of us, and that means they're a good place to invest. So my point is, do I think you need to keep buying stocks and shares? Yes. Keep buying stock and shares. Just make sure that you're buying them in sectors that are thriving and are likely to keep thriving in the near future. Don't forget to seek the opinion of a stockbroker before you go ahead and buy shares. I have also had the question, should you be buying gold, especially now that the price of gold is rising? This question has been from ladies. I've had it from a few ladies. And yes, I think gold as an investment is a good way to diversify your portfolio. Personally, I feel that gold is such a passive income earner, so passive. It doesn't do anything by itself and only increases in value considerably during tough times. However, we all know now that a recession is coming. It's no longer whether it's coming, it's about how long it's going to be. So this might be a good time for you to diversify your portfolio with gold. Gold has been known to do well when paper investments like stock and bonds don't do well. So yes, an investment in gold is a good way to diversify your portfolio. Just bear in mind that in the short term, gold can be quite volatile. But however, in the long time, it does keep its value, and sometimes you can make good profit on gold. And finally, you said to me, what should you do with your cash, your fixed deposit, and your cash ISAs? First of all, cash is king. So whatever you do, always have some cash in your savings account or in your cash ISAs that you can access easily. I'm not saying you should put them under your bed. Don't put cash under your bed. But always have cash in an account that you can access easily. Right now, the interest rate is low, so I would say don't have too much, but always have something. I have found that some transactions happen faster and more easily simply because you are able to pay cash for them. With cash ISAs, again, I would say have something in them, but don't make them the main place where you keep your savings. I'd rather go into stock ISAs. The beauty of stock ISAs is that you can diversify your portfolio. You can buy across companies instead of sinking all your funds into one company. Fixed deposits. If you've done a fixed deposit, check that your bank is still offering the same good interest rate they gave you at the time when you did the fixed deposit. If they keep doing it, you can keep rolling it over. But if the fixed deposit interest rate drops, because of course interest rates have dropped in the market, there might be a good opportunity for you to pull out your money from that fixed deposit and put it into one of the stock and shares I've just been talking about in this video, or perhaps the gold option that I also provided in this video. And this brings us to the end of this video. I would like to end this video by saying this is not personal financial advice and it's not specific to your circumstances. If you are not sure what is specific for you, please seek advice. Unlike cash, investments and all their income may rise and fall in value, which means you might make more than you put in, or you might get less than you put in. The most important thing is for you to seek advice before you make financial decisions. Thanks for watching, and until my next video, which is hopefully going to be about groceries, stay safe, stay home, and be bulletproof. Bye.